Ladies and gentlemen, good day and welcome to the iifl Finance Q2FY25 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Kapish Jain, Group CFO, iifl Finance. Thank you, and over to you, sir.
Yeah, thank you very much. Thank you very much, ladies and gentlemen, for joining in our Q2 earnings call for financial year 24-25. And I just would hand over the line to Mr. Nirmal Jain, our founder and managing director, to give you a perspective on the company's performance for Q2 before I take it back again and talk on our numbers as well.
Thank you, Kapish, and welcome everybody on the call. I think, as all of you are aware about the RBI, that RBI had put an embargo on the gold loan business in terms of sanctions disbursement on March 4th of this year, and the same was lifted on 19th of September, about 6.5 months later, So I think we have been able to satisfy RBI with our compliance rectifications and all the corrections that we did. And we have strengthened our compliance as well as all assurance functions which comprise risk and audit as well. And we continue to do so. So while this period has been challenging, but I think we emerge stronger from this, and this is something that would have happened to many strong companies that they face short-term challenges. And in the last 1 month, what we are seeing is the resilience of the company and the team, that we are coming back strongly. The customers' renewed loyalty is also very heartening and satisfying. As we restarted our business in a month, you would have seen that the gold loan book, which had fallen from 26,000 crores to around 10,000 crores by the time the embargo was lifted, is around 12,000 odd crores now. And as you know, we could apply to banks only after the embargo was lifted, and banks have a process of 3 to 4 weeks. So we expect the liquidity to improve, and that will allow us to grow the book or continue to grow the book at a good pace. In terms of otherwise, the environment is very good about the gold loan as well as MSME business. So, and all our businesses, even the affordable home loan business also, we are seeing that the demand is picking up as interest rates seem to be peaking out. We'll see that the demand growth continues. The new government has also reintroduced, although in a modified form, the affordable housing incentives through PMAY schemes and so on. Microfinance business has been passing through a bit of challenging times. Maybe later in the question answer we can discuss this more, but primarily because after the liberalization of loan to the microfinance or self-help group, there have been concerns about overborrowing by these customers. And then MFIN came up with a guidance of not more than 4 loans per customer, and that basically has led to some bit of stress in some of the borrowers. We believe that it might take maybe this quarter, next quarter, but again, the business will bounce back with strength. With this, I hand it over to Kapish for a more detailed discussion on the financials, and then we'll join you back for a Q&A.
Thanks a lot, Nirmal. Yeah. So now for the quarter, for the second quarter of fiscal 25, Iifl Finance at a consolidated level reported a net loss before non-controlling interest of 93 crore. So it's down by 118 YOY and 128% quarter on quarter. We recorded a pre-provision operating profit of 733 crore, which is down 21% YOY and 13% on a quarter-on-quarter basis. For the quarter, consolidated loan area grew by 8% on a YOY basis, and grew by 4% on a quarter-on-quarter basis to 66,964. Our core AUM, or we call it the product that we are focusing on, is microfinance, gold, home, digital and loan. It grew by around 7% YOY and 4% QoQ, which is 65,145. Forming around 97% of the total overall loan AUM. There was one exception item which we had reported in the financials. which is also elaborated further on slide number 5. So, company has certain AIF investments which are due to mature in June 24, for which it preferred an in-specie distribution of assets. So, debentures of underlying companies in lieu of the AIF investment. Subsequently, these debentures were assigned to an ARC. The book value of the SRs with the same underlying assets as of September 24 was 586.5 crore. The RBI circular on December 19, 2023 on investments in AIF required 100% provisioning of AIF investments if they are not liquidated within 30 days of the circular. To comply with the spirit of the circular, a provision equivalent to 100% of the book value of the SRs was made in this quarter, which caused in an overall loss. However, this is an absolutely exceptional item. We do not expect this to reoccur, and the same is disclosed henceforth rightly as an exception item. On the business as usual basis, our gross NPA stood under control at around 2.4% and net NPA around 1.1%, which is marginally up by 61 basis points and 3 basis points respectively compared to the same period last year. Our ECL provision gives the overall provision coverage on the NPA assets on 136%. The assigned loan book stands at around 13,948 crore, down by 24% YOY and 5% Q on Q. Besides these, there are co-lending assets of 8,489 crore, which is again down by 20%. Now, all of this is led by because the gold embargo was largely in place for the last 6 months. Quarterly average cost of borrowing marginally increased by 12 basis points YOY to around 9.15%. From a liquidity perspective, during the quarter, we raised around 3,216 crore through term loans, bonds, commercial papers, including 1,082 crore was raised through DA assignments of our loans. From a cash and cash equivalent perspective, we hold around 3,882 crores, which is adequate to meet our near-term liabilities, and we are looking for, as Iifl mentioned, further mobilization of liquidity to boost our growth since the embargo has been lifted. We are positive on ALM across all our buckets, and our net gearing with the infusion of capital that we raised in quarter 1 of around 1,272 crores is comfortably placed around 2.7. Our annualized ROE stands at around 5.2% negative, while ROA was 0.7 negative. As of 30th September, our capital adequacy with the infusion of capital stands at around 26.3. In the housing finance section, it's 49%, and for Samarthya NBFC, it's around 30.5. So across all the entities, the capital adequacy is way above the minimum 15% requirement from regulatory perspective. So that's all, ladies and gentlemen. I'll now open the floor for question and answers. Yes.
Sure. Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from Dhaval from DSP. Please go ahead.
Yeah, hi. Thanks for the opportunity. Just 2 questions. One is relating to this AIF provision that we have created. When do we expect the write back? Any thoughts around that would be useful. And the second question was relating to the gold book. Now that the ban has been lifted, how do we see the ramp up and when do we get back to our original size? Like, do we have a time frame and strategy around that? Some color around that would be useful.
Thanks. So AIF recovery will take about, all the full recovery of the underlying assets, as they get monetized, maybe about 2 to 3 years. And gold loan, it's very difficult to say, but I think, by March quarter end, we should be back to where we were a year before. So that is what my estimate will be. But I think nobody can really see how things will pan out from here in terms of market. But that's what my guess would be.
And Nirmal, just on the gold business comeback, so this, what are the 1 or 2 big changes that we are sort of doing in terms of, the absolute quantum delta in the next few quarters that you expect is quite material. So what are the 1 or 2 big changes? I've already seen rate, but any other points that you want to highlight to sort of see how we get back the lost business?
So I think, we aren't doing anything extraordinary in terms of being aggressive or whatever. We are just, customers are coming back. There's a relationship with the customers that we have for many customers for more than 10 years. And as the loan, wherever they have taken the loan, that tenure gets over, then, we see that the customers, many cases, they prefer to come back to us. And secondly, one good thing that has happened in the industry is that now I think it's become completely cashless, more or less. So it's become completely digital, which is easier from a long-term perspective and good for the industry going forward. And what we realized is that earlier there was a fear that if we move away from cash and customers are going to go back to money lenders. But I think customers have digital Jan Dhan account or UPI. Sometimes you have to educate and make sure that the activation happens. But as even the competition has gotten away from cash, so that is, I think, one healthy practice. And I think more or less the industry is now becoming fully compliant, and so that also is a good development, I would say. And given that the gold prices are firm, I think, and there's a demand at the ground level in the economy, many of our customers are small businesses again. So we see that there should not be, and there'll be good traction going forward in the next few months.
Sure. And just last question on the MFI business, how do you think the credit cost is likely to move in the next like a couple of quarters, and how are we looking to navigate this cycle? Any color on that would be useful.
Yeah, I think Venkatesh, who's the CEO of our microfinance, he'll take this question.
Yeah, I mean, if you look at most of the stress which spanned out in the quarter two, we are seeing some mild improvement in quarter three. I mean, it's still early days for us in the month of October. Given the whole thing, if you look at, given 65% of our overall customers who borrow are agri or agri-allied, and their income levels given the monsoons have done well, will not see a dip. And we see that these things are stabilizing. And also our fresh lending, if you look at it, we introduced our guardrails even much before MFIN bought about it. We have got it in nothing. So our new book is still doing well. As the stress is only with the older thing, which will also ease out, and by the quarter three and quarter four will look much better.
Got it. Thanks. All the best.
Thank you. The next question is from Abhijit Tibrewal from Motilal Oswal. Please go ahead.
Good afternoon, everyone. Thank you for taking my question. Just again, circling back to the gold loan business, we've also seen a management change in our gold loan business where Mr. Saurav Kumar has moved to a group role now. So are we now looking to appoint someone internally to lead this business, or are we looking for an external hire? Also, I mean, earlier in the question, when Dhaval asked about your outlook on gold loan business, we shared that we are looking for normalcy to come back by March quarter and maybe go back to where we used to be prior to the ban. But are we working with some gold loan growth targets now in mind, if not for this year, at least from next year onwards? That is my first question.
No, sorry, what is the second question? Next year onward, what do you want to do? Sorry, what is the question about?
So the question is, and while we said that by March quarter end, we are expecting that we will be where we used to be prior to the ban in the gold lending business, not in terms of loan book, but in terms of momentum. So, I mean, if not for this year, at least from next year onwards, are we thinking about how we want to grow in terms of some loan growth targets for the gold loan business?
Okay. So firstly, the management changes are in normal course of the business. So, people, I mean, they have been there for long term, so there's nothing more than that to read into it. In terms of hiring internally or externally, these things are, unless they are done, it's very difficult to make a statement on this, because we have quite a few talent available inside also, but obviously they are doing their jobs. I mean, and at the same time, we also want to strengthen our management team with, and actually normally all our businesses, we prefer a cross breed of talent where We try to take it from a few very good players in the industry so that we get the best practices from multiple players. So these are things which are very difficult to make a futuristic or a forward-looking statement, because we have a very good HR team and a NRC, which is Nomination Remuneration Committee. So they look at all the senior management and take a call on that. Second thing is, how do we look at the growth next year? So one is that, you would have noticed when we say digital loan, this is our business loan and this is the MSME loan. And our gold loan is, in a way, many of our customers are MSME. So in terms of when we look at our standalone company, we'll try and diversify it a little bit more. So the loan against property, which is the secured business loan, and unsecured business loan, I mean, that business probably will grow faster. Next year's growth will depend on number of factors, including gold prices as well as the economy and the economic activity. So, I'm not, we don't want to make any guidance or a forward-looking statement, but that all depends on the industry and the economy. But in terms of strategy for a particular product, yes, we'll grow business loan. I mean, given the small base and the investment that we made in the last 6 months, that will grow that is expected to grow faster. But that again, as I said, depends on the macro environment.
Got it. Thanks. Second question was that I had was for Venkatesh. So I mean, while you said that early days seeing mild improvement in third quarter, and the fact that we already implemented those guardrails that Iifl recently came out. Just trying to understand, I mean, in your assessment, I mean, what could, I mean, likely credit costs be for the MFI business for this full year, given that, I mean, we already saw Q2 was elevated. And when we speak to other your NBFC MFI peers, no one is really kind of giving that sense that things have already peaked out in the MFI space. So how are you thinking about the MFI business?
Yeah. See, earlier when I answered, I said it is early signs of some kind of stabilization. I didn't say it is peaked out or something. But in terms of the credit cost, if you look at it, we should be hovering anywhere between around 3.75 to 4% kind of a thing for this year.
Got it. And so last question that I had, I mean, some of it is data keeping and some of it is on the credit costs. One is, I mean, this time around, if I go through our P&L, on the other income side, some of the items like net gain on fair value changes and the assignment income that you report, they are higher. So just trying to understand, I mean, are they going to be at these levels or there is something lumpy out there? And also on the assignment income side, have we done any assignments after the gold loan ban was lifted is one thing that I wanted to understand. The other thing is, if I look at credit costs for this quarter, credit costs even in our standalone entity was elevated. So was just trying to understand, was it just some residual cleanup on the gold loan side that we did, or this was predominantly coming from our CRE business?
Sorry. No, I think you have two questions. One was about the assignment. So the assignment was done in housing finance because home loan business has been continuing. And given our strategy where we believe in maybe a 40% of is off book, so that can be either by way of assignment or co-lending. So assignment transactions you can expect more or less every quarter. And then second, coming to the lumpy fair value, yes, there is one that the NSE shares, I mean, most significant part of it has been sold, and that profit has been booked in fair value, about 80 crores or something. So I think that is not recurring. But from the treasury, we have something or other, that there are opportunities, but there is one lumpy item in the fair value gain. You would recall we had NSE shares, which we sold in last quarter.
Yes, sir. Yes, I recall that. And so again, the second question was credit costs in the standalone entity also appear a little elevated. Was it some cleanup that you have done on the gold loan side, or was it predominantly coming from the CRE portfolio?
No, it's coming from MSME actually, and MSME book is also growing. So we increase our provision, and we have fairly conservative provisioning policy. So increase in the LLP in the standalone is primarily because of MSME. MSME
Got it.
loans plus LAP,
Got it. And so just trying to squeeze in one last question. So, I mean, given how the environment is, everyone is talking about broad-based stress that they're seeing in unsecured segments. Despite that, I mean, our guidance that we'll continue to grow digital loans, unsecured business loans. I mean, how are we looking at it? I mean, in an environment like this.
Well, that's a very good question. So the worry about unsecured loan is more on a personal loan and consumer loan, which is buy now, pay later, or a personal loan where, many times salaried people, because they offer too many loans and they get over-leveraged. Our focus of digital loan as well as unsecured loan is now entirely on business loan. And there are two advantages, that we have over, say, a personal loan or unsecured personal loan business. One is these are covered by insurance. So I think government has two very good insurance schemes, CGFMU and CGTME, MSE. So the one covers loan less than 10 lakh rupees and the other one covers loan above 10 lakh rupees. We had applied and we have got the approval now. So now onward, I think we'll be able to, the approval has recently come. I mean, there's a process and we have to comply with it. So from this quarter onward, we'll be able to take advantage of that also. Secondly, all the banks, because on their own, they find it difficult to achieve the Mudra targets or the SME or MSME segment of the priority sector lending. So we are seeing very good response from the banks to partner with these loans, and also the risk is priced in. So there will be losses, which can go up to, in a bad cycle, up to 5-6%. But then, the interest rate also is around 20 to 24%. So our strategy basically is, to make sure that we are protected by insurance cover. Of course, our credit quality also we can be strict, and not that we won't underwrite anything, but we try to leverage our distribution network to source these loans. And third is that the bank partnership model where risk along with the benefit of priority sector is also transferred to banks.
Got it, sir. This is very, very useful. Thank you very much and wish you and your team the very best.
Thank you. The next question is from Shubhranshu Mishra from Phillip Capital. Please go ahead.
Hi, Nirmal. Hi, Kapish. So, two questions. The first one is, what is the level of provisions and write-offs you are going to see in the microfinance business going forward in the next couple of quarters? Second is on the gold loans. Are we seeing any customers, or what is the proportion of customers who are coming up and pledging their gold in order to pay up for their unsecured exposure? Thanks.
So I think Venkatesh spoke about around 4%, 3.7% to 4% of LLP in this year, in terms of which is, I think the first 2 quarters we have done, what is the provision LLP that we have taken? 300 crores already in microfinance. And the book is around 12,000 odd crores. So maybe 10,000?
10,000. Okay, microfinance.
And the total MFI is okay, 12,400. So maybe another, in terms of the current expectation, is another 200 crores in the next 2 quarters, broadly.
Right.
So that will take to 500 or 480 or 500, whatever we are talking about.
What would be the write-off out of this?
Home loan to repay unsecured loan, we have not seen that kind of tendency. I mean, if somebody is doing it and not disclosing is a different thing, because there's not something that will normally capture in the stated end use. But my gut feel from talking to people, I don't think that may be exception, and that is not the trend.
Understood. And what has been the write-off in microfinance in the first 2 quarters, and what is the write-off we are expecting in the next 2 to 3 quarters?
So I think the write-offs and loan loss provisions put together will be run this thing. So what are if you want to have Samasta write-offs is 107 crores and total provision is how much in the first? I think 2 quarters we have taken the total loan losses and provisions is 300 crores.
No, I get that. But what is the write-off?
200 odd crores and over and above write-offs, 100 crores is a provision.
What is the write-off we are expecting in the next 2 quarters or 3 quarters?
I think, Venkatesh, you have the estimates with you or you
See, if you look at in the last, it will be, we are trying to minimize things. I mean, if you look at in the last quarter, we were able to figure out what it could scale up to. Now, we have collection mechanisms where we will be working on, even there'll be a lot of pullback in terms of the 90 plus and the provisions we have made and even the write-offs we have taken. So we don't expect it to go drastically above from what we have already done in the first 2 quarters.
Understood.
Incrementally, I think if you see 4% as a loan losses provision, write-offs plus provisions put together can be another 200 crores in next 2 quarters.
Yeah, that should be enough.
Unless, if based on the current estimate, but it's very difficult to make a forward-looking statement with this, how the industry evolves is one has to watch.
Understood. This is very helpful. Best of luck for ensuing quarters.
Thank you.
Thank you. Next question is from Vivek Ramakrishnan from DSP Mutual Fund. Please go ahead.
Thank you. It's a continuing question with the other questions. So let me start with microfinance. Venkatesh, in microfinance, when you say this, stability, the PAR 0 going to PAR 30, PAR 30 going higher, has the flow stopped? Has the momentum of flows been improving over the last few quarters? Do you see any improvement from that? Another way of asking the question is, whatever is there, you're going to be writing it off, but the new flow is not going to be that significant.
See, Vivek, if you look at the flows have actually not completely stopped. I mean, if you look at the quarter 2 was the worst quarter, we have gone through. What I mentioned earlier was, given that we have the October month is a lot of holiday things, we are seeing slight stabilization in terms of the flow. So, we'll be at post all the festivals getting done, so that's when the stability of the sector would be seen. So we are seeing post somewhere around the November 15 kind of a thing where the stability will be able to see. As of now, the collection efficiencies have slightly improved from what we saw in the month of September.
Oh, excellent. The second question is on the digital loan or the unsecured SME loan. Nirmal had mentioned about credit loss guarantees which are there. How much does it cover in the sense that what is the typical SME loan loss in an unsecured portfolio, in your portfolio that you're estimating? And then what will be the overlay of insurance that will reduce it to for going forward?
So Vivek, it's quite complicated scheme, but I'll try and briefly explain it to you. So there are 2 schemes, one about 10 lakh rupees and one less than 10 lakh rupees. So about 10 lakh rupees, they cover only twice the premium. So 1% is the premium, so maximum they can cover is 2%. So broadly, 1% of losses can be covered by that scheme about 10 lakh rupees. You get it? Less than 10 lakh rupees, what they do is you can cover 15% of your portfolio, in which 3% of losses will be borne by the originator, like us, by the company. And out of the remaining losses, 75% is given by the insurance. So to put numbers in perspective, if you have 1,000 crores rupees of portfolio, you can cover maximum 150. So that is good enough because normally one wouldn't expect more than 15% of losses. And out of that, 3%, which is about 4.5, is borne by you. And say out of the remaining losses, 75% they will pay you. So roughly 109 crores can come from them. If you have a 1,000 crore portfolio and your losses are maximum up to say 15%. But this is how the numbers work. You got it for the less than 10 lakh rupees loan.
Yeah, perfect. Thank you. This is very useful. And
premium is around 90 basis point or 100 basis point. That is what you will pay.
Okay, yeah. Thank you. That was very useful.
In summary, about 10 lakh rupees, you should try and restrict your losses to 2%. Otherwise, and there also is like a 1% premium, 1% subsidy. In less than 10 lakh rupees, it can be significantly better. But of course, they will 75% they'll bear, 25% still you have to bear. Perfect. And 25% over and above first 3% of losses.
Okay, got it. Thank you, and season's greetings to all of you.
Thank you. Next question is from Yash Dantewala from Dante Equity Capital. Please go ahead.
Hi, am I audible? Hello?
Yeah, go ahead.
Yeah. So I wanted to know, now, on the gold loan side, going forward, since we have a lot of capital, right? And we've raised capital through rights issue, etc. What I want to understand is, are we going to focus on gold loan itself, or are we going to focus on co-lending? Because right now we have no reward to focus on co-lending, because we have surplus capital and we want to get profitability in, and co-lending is not very profitable, right? And can you put some light on that whole area, how you're going to go forward?
So right now our capital adequacy is good, but in 3 to 6 months, as we get back to the earlier level, it will get back to those, again, the older level. So as a strategy, nothing changes, because we'll continue to focus on both co-lending as well as our own loan book in a ratio of 60-40 that we had historically for the entire portfolio. And
but initially we should be focusing on gold loans itself, right? Why co-lend?
Why co-lend is liquidity and the use of capital, then that allows you to grow without diluting capital. So at this point in time, what you are saying is right, that this quarter, next quarter, we can see, that we can do our own book. But we want our capital adequacy also to be 15% is minimum requirement, but we want it to be around 20% or more, just as a margin of safety. And that is where co-lending helps.
See, the reason I raised this point is, your microfinance is clearly slowing down, and I don't see microfinance recovering for the next 6 to 8 months. So definitely on the microfinance end, you're not going to be able to increase the book size. Home loan side, that is going to grow at a steady rate of 15 to 20% from what I'm able to see. Now, since the microfinance part is not growing and you don't want to grow your unsecured book, you're obviously going to focus on growing your secured book, which is the gold finance book, at a much higher rate. So you don't need to co-lend at least for the 6-7 months, right? Because co-lending is, you're completely right. I get your point on the capital side, but co-lending is not very profitable. So anyways, that was just one point that I wanted to raise.
So what you're saying is right, that now I think the focus is more on the secured, where gold loan as well as LAP is another product, which is also a secured product as a part of business loan.
Right. So do we see MSME, sorry, please go ahead.
So, see, co-lending is a long-term strategy, because see, what happens is, if you go like what it allows you to leverage, so even with a reasonable ROA, your ROA can be significantly higher. But for the time being, maybe like we have to see for next 1 or 2 quarters, and then
So I have
look at the strategy.
You're completely right. Co-lending works. You've been doing it. You've been growing at a 30-35% CAGR in the gold loan space.
Absolutely right. So then again, it depends on the pace of growth. So maybe for the time being, we have to watch for next 1 or 2 quarters and then rework on the strategy.
Exactly. So I was just saying, at least for the first 6 months, I think you can focus on gold loans and take it into your own books, and then maybe focus on co-lending as and when the old book is built back up. That was one thing I wanted to point out, because clearly the unsecured space is kind of wobbly for the next 6 to 9 months at least, till the whole microfinance cycle plays out. So that was point number 1. Now, can you talk more about our focus on the MSME portion? How are we planning? Are we planning to grow that at a significant pace? If you're secured MSME, I'm talking about. How are we focusing on that whole segment? And also on the housing loan front, there have been talks about an IPO for value unlocking. I think in the last interview that I watched, he said something about 2 years sort of timeline. So could you throw some light on that too?
Okay, so MSME piece, so because we have a very large distribution network, and as we roll out a product, on a small base, growth can be good. But this is something which is because we got 2,700 branches for gold loan, and if you add up all our branches, then we have more than 4,000 branches, including microfinance and other products. So the loan against property is a product which our branches can do, and in the 6 months, 6.5 months of embargo on gold loan, we will be training our people to do the unsecured as well as secured business. Now, unsecured business, although unsecured basically obviously evokes negative emotion about risk and quality of asset, but as I said, that this is something which is priority sector lending, which is what government is also pushing banks to achieve the target because that's for the economic growth. And just to give you perspective that despite so much of push on MSME, in India, MSME contributes 30% of GDP. In China and South Korea, where the countries have grown very rapidly in the last 2 to 3 decades, it's 50 to 60% of the economy. So MSME has a long way to go, and the only way MSME can grow is by availability of credit and distribution of credit. And there are 85 million MSMEs. So the number is so large and enormous that the banking system alone cannot achieve this target or this objective or mission. So we work in partnership, and that's why government is supporting by way of insurance schemes or by way of targets of priority sector lending. What we have to do is that we have to partner with the banks and make sure that we do what we are good at, and then banks basically also we help banks also achieve the targets and make sure that the risk is contained within the price that we charge. So that's about MSME. What is the second question?
About listing of the.
Yeah, listing is again. Sorry, so I don't think we'll do an IPO yet because unlikely. I mean, I can't say we'll not do or do because this is.
No.
We have an investor in our housing finance company, and every investor basically will need some kind of option to exit or liquidate. But there's no rush or no hurry. But when we do this, whatever we have discussed as the preferred option, what we have done for the group is demerger of the businesses so that without any further dilution or without any change in the economic interest of various shareholders, the companies get separately listed. That has an advantage that it can attract different types of investors because there are some investors who are keen to invest in microfinance who are more oriented towards social goal. There are investors who are very keen on housing finance, and then there are investors for gold loan and other businesses. So, but I think it's a process, and the process takes time. So at this point in time, nothing has yet been discussed or approved by the board. And whenever that happens, obviously we'll let everybody know.
Yeah, but see, after the Bajaj housing sort of listing, it's very clear that HFCs that are able to grow their book at a 20% sort of run rate and that have stable asset quality get a very decent price to book. I'm pretty sure that you have more inputs than me in this particular thing, so I hope you do the best for shareholders. Thank you for your time. Thank you for taking my question.
Yes, we'll do it at the right time. Yeah. Thank you.
Thank you. Next question is from Anusha Raheja from Dalal and Brocha. Please go ahead.
Is it audible?
Yes.
Yeah, so firstly on the gold loan side, I think we had, if you can just take us through, how has been the walk-ins of recently versus it was 6 months prior, and the competition has also intensified. You would have also taken away some of your market share. So in that sense, how do we see growth in this backdrop?
Anusha, what is your question? Walk-ins. So, we have database of customers that were our customers. And walk-ins are also there. And as people get to know that we have resumed business as usual. So there's a flow of customers. So we are seeing a very healthy trend there, Anusha. And our people are really motivated and committed, so to get back the market share. And obviously, the profitability and everything depends on that. So the trend is positive.
Okay. And the stage 2 assets, 31 to 90 DPD, there has been a significant rise, across all the loan segments, and the levels are higher than what it was in Q1 as well. So what is causing such a significant rise? Okay.
So in gold loan, I think because we just started almost towards the end of the quarter. So, we wouldn't force customer to liquidate the loan, and obviously they are also waiting for. So if you see gold loan typically, because we are small customers, 50,000-60,000 rupees loan, they tend to pay towards just before 90 days, to avoid auction or threat of the liquidation. Then construction finance, they are lumpy businesses with one of the loan basically not being paid or delayed by more than 30 days spiked the number. And I think other businesses, the trend would be similar if you really look at 31 to 90 days of the last quarter.
And if you could just tell us what could be the blended credit.
We had a 6% that becomes 7%, and obviously there is an increase in the gold loan part of it, which is a little bit of increase in gold loan, and so there is a marginal. The 6% has increased up to 7% on the whole, and we are talking about stake to 31 to 90 days.
Okay. And what could be, blended credit costs that we can factor in on the overall console book for FY25?
Microfinance has moved up more than what we had expected. Other businesses remain more or less similar. So what we are talking about, 2% may become 2.5% on the whole.
Okay, any number to put up there, including this MFI, credit cost on console book?
MFI console book will be around 2% of the loan asset on a steady state basis.
Okay, and also on this digital loan.
In all segments of the businesses, So gold loan slightly is higher, 2.4%, but in this we expect to go below 1%, as the business is fully rolled out properly. And the other trends are more or less, so the business loan will remain around 3% in terms of, we may bring it down to 2.5 over a period of time. Yeah.
Okay. Yeah, and if you can just take us through, growth in across all segments. Like you said that in gold loans, we would see by March 25, the growth will revive back, and MFI is likely to see a consolidation. Some, color on the growth for the home loans and digital loans and LAP loans. How do we see that segment growing in FY25 and in the medium term?
Is Modu online? Modu? Okay, sorry.
Hello.
Yeah.
Okay, Nirmal, you go ahead, please.
Well, I think she's asking for the growth in home loan segment of the business.
Yeah. So we are seeing as a home finance as a whole, we expecting about the AUM growth of about 17 to 18% for this year, and all the segments should move in the same tandem. We can expect home loan about 8, maybe a couple of percentage more, about 20% growth in home loan, and the other part of the business should be about 16 to 18%. That's what we expect in the housing finance business.
Okay. Other business, I think we already spoken, Namisha.
Okay.
Thank you.
Thank you. Next question is from Mr. Shikhar Mundra from Vivo Commercial Limited. Please go ahead.
Hi. Just wanted more clarity on this exceptional item. So where were these AIF investments exactly made, and what is the reason for them not being liquidated?
Sorry? AI investment was made in June 21, and it was to mature on 1st June 24. So in the month of March, the circular of RBI came on 19th December, giving 30 days to either liquidate or make 100% provision for the same. We couldn't liquidate in the 30 days. But what happened that in the month of March, when we got implicit distribution, then those debentures that we got on our book were also delinquent because they were delinquent in the portfolio, most of them, not entirely. So that thing is what we sold to ARC. And, normally all the delinquent assets, the resolution mechanism is through ARC, which is, and basically in the ARC, normally we also invest in the security receipt. So the underlying collateral being the same, what we have tried to be is that we be conservative and follow the regulation not only in the letter but also in spirit. While the asset, has changed the form of instead of AIF, it has become security receipt, but underlying collateral is the same. So, we decided to make a full provision of it.
And when can we...
One-time non-cash item.
Sorry?
This is one-time exceptional provision that we are making, and this does not have any implication in the cash profits or anything which is... So this is just a provision.
And when can we expect the write-backs from this?
I think this question I asked me first, maybe 2 to 3 years will take to realize all the money.
Thank you.
Thank you. Next question is from Kriti Tripathi from NBS Brokerage. Please go ahead.
Hi, sir. So, in continuation with the AIF question just mentioned, I wanted to know that how much was the amount invested by us in the company, in the AIF? Apart from that, the initial amount and then now our share of profit and loss, what is the difference between that? So, can you explain on that?
So, original amount was, I think, 900 crores or 1,000 crores, out of which some repayments had happened.
Okay.
This is 900,000 crores.
Okay.
And then when we got the institution transfer, it was 675, but I think there was a write down when the ARC took it. The ARC do their own valuations and there's the option bidding process. So then what we hold from that AIF was 586.5 crores as of March, NBFC. So there were lots of transactions in this. So I'm giving you a broad estimate. That we started close to 900 to 1,000, but now it's 586.
Okay, so that's basically...
Some write down, so both put together, yeah.
Okay. Okay, sir. Thank you.
Yeah.
Thank you. Next question is from Kamal Mulchandani from Investec Capital Services. Please go ahead.
Hello, sir. Thank you for the opportunity. I had a couple of questions regarding the gold business. Firstly, I wanted to know that have we reduced any interest rate on gold loans recently? Additionally, wanted to understand how are the recent trends post the lifting of the RBI ban, and if you could just brief upon the strategy around how to scale up the gold business back to where it was as earlier. I'm sorry if I may have missed the strategy related part. Thanks.
So we have not resorted to cutthroat price competition to get the assets back. But we have so there are multiple schemes that you run. Like suddenly you have a 99% or 12% interest where it has to be a monthly interest income, and now that we are in a slightly lower LTV than the other schemes. So, we expect the traction to be more in the lower yielding products that we have. But we are not resorting to any cutthroat price to get the assets back. Secondly, our strategy is very simple, to focus on the customer. So we are not really, at this point in time, we don't see the need to be very aggressive or go out of way to, focus on, to get the customers are coming back. And as their loans mature and elsewhere, we are seeing good traction of customers, getting back to us where they were earlier.
Okay. Like, and any initial trends which you are seeing, like it's a very small period, but how has been the disbursement trends in October?
It's very good, very positive. So in about a month, just when we started, obviously it takes time to get back to the momentum. So our loan book, which was 10,000, has gone up to 12,000.
Okay, perfect. Thank you so much, sir.
Thank you. Next question is from Raghav Garg from Ambit Capital. Please go ahead.
Hi, thanks for the opportunity. Just one very small question. In the standalone business, is there any overlap between the digital gold loan customers and, the digital loan customers and the gold loan customers?
Which customers, sorry? digital loan and gold loan customer overlap is very minimal. I would say maybe
how
less than
much would
1%,
that
kind of, 1%.
Okay. Okay. Sure. And another question is, so when I look at slide number 12, right, which has stage-wise assets, there the digital loan assets is about 6,500 crores, whereas on slide 18, the digital loan AUM is about 5,400 crores. So where is this difference, in which entity, or I'm just trying to reconcile these two numbers. Can you help?
No, 5,400 crores from the slide 11, right? 6,500 crores?
No, so on slide number 12, the number is 6,500 crores, and on slide number 18, the number is 5,400 crores.
Just one second. 6,500 crores, 6,500 crores. Hello? Hello?
Yeah.
So can you hear me?
Yeah, I can hear you.
So, there is some loans which are sourced by Samasta Microfinance, and they are booked in the parent company. So that is the difference. So the way, the individual loans which are booked through Samasta for, micro lab, that is where I think there will be a reconciliation, which I'll tell you where. Yeah, so if you go to slide number 35.
Yeah.
I think it's home equity, which is lab secure, which is originated by Samasta but booked in NBFC.
Understood. Okay, thanks. That's all from my side.
Yeah, I think maybe from the next presentation we'll make it a little more clear in terms of how we classify this the assets. Yeah. Okay.
Thank you. Next question is from Rishikesh from RoboCap. Please go ahead.
Hello, am I audible?
Yes, sir. Please go ahead.
Yeah, thank you for the opportunity. Firstly, on gold loan, so if I see in peak, we were around 23,000 crores of loan book. Do we have any internal targets to get there again, and by when?
No, we don't have any target as such, but we'll, as the business grows, we'll get there in some time. Not too, it won't take too long.
Okay, and how do you see the growth in our lab book going ahead?
So lab book, had two components. One was the old lab book, which was of a larger ticket size. So, that basically, obviously, that is tapering off. So when you see the overall lab book, there's only 1% growth. But the normal lab book that we are continuing, which is a smaller ticket size, is growing heavily. I think Monu said that about 17-18% is the trend there.
Okay, so are we expecting this to grow by 17-18% going ahead?
So the overall reported lab has the older lab book, which is larger ticket, which we are discontinuing. So what growth you will see here will be lower, not so much, but maybe slightly lower.
Okay. And just to come again on gold loan, what growth rate are we expecting going ahead?
No, I think, again, maybe everybody is very curious about this, but unfortunately, I'm not in a position to give any forward-looking guidance on this. Only thing is that we'll continue to grow at a steady pace as our customers come back. And because we have a distribution network and base of customers, we do not think that it will take too long to get back, what our loan assets were before the ban. But still, I can't put a finger and say this is the time frame. What we are told that we want to make sure that customers are serviced well, no compromises on compliance and on the risk management, and at whatever pace we can grow the business, that should be healthy growth. That is more important for us.
Got it. No problem. Thank you very much.
Thank you.
Thank you. Next question is from Shweta D from Elara. Please go ahead.
Thank you, sir, for the opportunity. So you actually partially answered my question, but nonetheless, so in light of regulatory forbearance and RBI calling out on interest rates, so do we see repricing of our assets on microfinance side, on the lower side? And alternatively, I think you answered this, on the gold loan side, are we going to stick to competitive rates because we have seen slight drop in your yield? So in quest of growing the gold loan book, are we looking at keeping the rates competitive on the gold loan front? Thank you.
So on the first point of interest note, if you see slide 40, then we have implemented the risk-based pricing, and that is what actually even RBI is looking at. And we did not have any predatory pricing in any of our businesses. So those 35, 40, 45% rates are not for any of our businesses. So we are very conscious about it. And also we have now a board-approved policy for interest rate cap. So that is about the higher interest rate side. Then your second part of the question is on the lower interest rate to be competitive. As I said, that the customers, when they come back, the early customers are more, the flow will be in the lower price scheme. But there, the requirements like, the LTV are more conservative and there's a monthly interest payment. So the yield may fall a little bit. But as I said, that we are not getting into any cutthroat competition. So there won't be a dramatic impact. But yes, marginal tapering off will be there in this quarter, next quarter for sure.
Okay. So just coming back to the MFI side, so I didn't imply usurious rates or something which you're not confirming with the RBI norms. All I meant was, are we looking at recalibration in interest rates further on our MFI piece?
We have already introduced, as Nirmal pointed out, the risk-based pricing is already introduced. So this is with the guidance with what RBI asked us to do. So that's already in force as we speak.
Sure, that helps. Thank you.
Thank you.
Thank you.
The next question is from Navneet Bhaiya, who's an individual investor. Please go ahead.
Hi, sir. I wanted some clarity on your security receipts portfolio. So in your slide 23, you've mentioned that your outstanding security receipts are about 3,600 crores, against which you have a provision of 612 crores. So the 3,000 remaining, is that also at risk? Why aren't we providing against those?
So security receipt accounting is done based on the accounting principles. So I know there's a fair value, and based on that, you have to make sure that they are valued. So this is an accessible thing, just to make sure that RBI's circular is complied with in letter and spirit. But the other security receipts are good, and in terms of their expectations on the whole our portfolio, we expect it to recover fully, and we don't see any need to basically provide for it. But as slide 23, we give more color on the portfolio of security receipts. But we make sure that if there is any risk or any expectation of a loss, then we provide for. But we don't expect any loss in the portfolio.
Okay, so of the 3,600 crores, you've provided for 586 crores. So we are saying that the remaining 3,000 crores, we are not expecting any credit costs also to occur in our P&L.
3,600 crore portfolio that you have, I think that will recover fully, along with some interest or whatever which should accrue to the ultimate borrower. That is what our expectations would be.
Okay, understand. So no further charges is what we expect on the P&L. Do I understand that correctly?
Yes, you're right.
Okay, fine. Thank you. That's all I want to check.
Thank you, sir.
Thank you very much. That was the last question in queue. I would now like to hand the conference back to Mr. Kapish Jain for any closing comments.
Yeah, thank you very much. Thanks a lot, ladies and gentlemen, for joining our quarter 2 earnings call. For any further query, we are available. You can write to us at our investor relations email ID or reach out to us separately, and we'll be more than happy to clarify things, anything further from the results. Thank you.
Thank you.
Thank you so much. Have a good day.
On behalf of Iifl Finance, that concludes the conference. Thank you for joining us, ladies and gentlemen. You may now disconnect.